Thanks, George. Awesome. So I'm super excited to moderate this panel about exchanges, centralized exchanges, decentralized exchanges, with some prominent crypto investors. So before we get started, I'd love to give each of them 30 seconds to give a quick background about yourself, and then we'll go from there.
Cool. My name is Haseeb. I am an investor and an advisor to MetaStable Capital, and before that I was a software engineer.
I'm Joey. I'm co-CIO at Pantera Capital, and I also started Augur, and you should look out for Augur V2 Q1 next year.
Cool. Hey everybody, my name is Chris McCann. I'm the founding partner of a fund called Proof of Capital, or VC focused on the crypto and blockchain space. And then I previously used to work at a bigger VC fund here called Greylock Partners, where I worked on a lot of the emerging tech sectors we're looking at, including all of our Bitcoin investments we made in 2013 and 14.
Hi, everybody. My name is Will O'Brien. I'm an angel investor, crypto investor. I was the original founder CEO of a company called BitGo back in 2013 to 15. And as an individual, I'm an LP and advisor to Blockchain Capital, and I also advise other funds in Silicon Valley. I have companies in Korea. I'm a judge on a TV show called Block Battle in Korea. That's kind of fun. It's like a Shark Tank for blockchain. And last year, I made about 28 investments, companies like Telegram, Orchid, Akash, Nodal, Hub here, and then also funds in London and Korea. So great to be here. Thank you.
Awesome. Thank you. So the conversation today is supposed to be about exchanges, and specifically DEXs. And centralized exchanges are probably the only thing in crypto that has product market fit today. Like probably the only thing. And so we have a bunch of investors who have been thinking about what is the future of exchanges. And so we're going to go through a bunch of questions to grill them on the future of exchanges. But before we get into that, there might be some beginners in the room. So I want to take a minute to allow Haseeb to explain what exactly is a decentralized exchange.
Cool. Okay. So I'll give myself a minute to do that. So a centralized exchange is basically the simplest thing you could think of. Everybody on these different blockchains sends money to a guy, and that guy has a website where people can post bid asks, and they decide who gets the money, and then that guy gives people their money back when they ask for their money back. So the guy, the company, whoever it is who runs a centralized exchange, they basically control everything, and everybody needs to trust that person. That person custodies all the funds, meaning that basically while everybody has deposited into the exchange, that company or person has control of everything and can screw everybody over if they want. And this has led to famous disasters like Mt. Gox. So a decentralized exchange, the interest in decentralized exchanges really began after Mt. Gox. Is this idea that can we still get the ability to build these financial platforms, which clearly people want. There's a lot of demand for them, like Preethi said. But we don't want to give that much power to any single individual just for facilitating trade. And so what a decentralized exchange does is on a platform like Ethereum is the most obvious example, you can actually just code up the rules in a smart contract to allow people to directly engage in trade. And so there have been more and more DEX designs as of late. I mean, one of the very earliest ones was EtherDelta, which famously did everything on chain. So every single order was actually placed on the blockchain. But now DEX designs are more complex and allow a little bit more better throughput than what EtherDelta allowed. But that's basically what they all do, is they don't directly control your funds. Some smart contract does.
Cool. Thank you. Okay, so we have this grand vision to build these decentralized exchanges. And what does the landscape like that look today? Like what percentage of exchanges are centralized and what percentage are decentralized?
It's like 95.96% or so is centralized, and maybe 4 basis points is decentralized right now.
Wow, that's horrible. Why is that?
I mean, I would say the user experience just isn't there for DEXs. So if you go and try to use one, it's much slower. Most of them are based on Ethereum, so you can't trade, Bitcoin and Litecoin and other assets on them. And as a user, you face all these problems like speed. If you think of marketplaces, being able to modify and cancel orders very quickly is really important. On DEXs, those actions are either slow, in the case of something like 0x, or they cost money in the case of an on-chain DEX. And so it results in not very liquid markets, and illiquid markets is a bad experience when you're designing a trading system.
Really cool. And as investors, are you thinking about investing in both centralized exchanges and decentralized exchanges? Like, what's your sort of thesis around where you invest?
Yeah, at least me in particular, like I tend to be more empirical about things. So the most important factor when looking at a new exchange is the liquidity, trading volume, absolute number of traders, and does the founder and sort of CEO and team, can they actively actually do real user acquisition on that community of people that matters? And again, I guess maybe to take a more slightly controversial statement, personally, I actually think the sort of core value prop that DEXs try to aim for is self-custodial. So don't give your funds to an exchange, hold it in your own wallet. You don't have to sort of trust the party or the person, so to speak. At least in my opinion, just looking over the landscape of DEXs for the past few years, that value prop is not motivating enough for people to switch over. I don't necessarily think it's a technical or architectural issue. I just think that value prop doesn't resonate with real traders. And maybe it's just because I spend a little bit too much time in Asia, like knowing a lot of the people who trade sort of significant volumes in crypto. But like that's not something that would get them to switch over, even if it was purely and perfectly fast.
Do you agree?
Yeah, I'll jump in that by analogy. So in 2013, when at BitGo we were pioneering multi-sig technology, which everybody knows what multi-sig is right now, nobody cared. Nobody cared about multi-sig because the price of Bitcoin was low, and they said, my CTO has the keys, we have cold storage, we're fine. And ultimately what needed to happen was a number of hacks on exchanges to wake people up that they should be using multi-sig. The realization it's hard to build that, so you should use a service provider who has things like insurance and standards, and that's their job. And ultimately, the industry had to move that way. And so I think we're seeing the same thing with 0.04% is fine right now for me, because as and when the use for DEX becomes apparent, then we're already building the core kind of prototypes of that infrastructure. The Union Square put out an article last year I really like, which is the apps infrastructure cycle. So you have some basic infrastructure, and then there's a breakout app, and that begets new infrastructure. So the light bulb was invented before the electric grid, right? And the airplanes before airports and hubs. And similarly, AWS came out of Amazon having a breakout business. Facebook rewrote PHP. So these things, what we're doing in DEXs right now, I think is going to be critical. My first part of my career was in trading, building trading systems, equity trading, capital, fixed income trading, program trading. So I saw how Wall Street was evolving. There's a guy named Seth Marin who built a company called LiquidNet to provide dark pool liquidity for institutional trading. That was an innovation in an already existing industry. And I think DEXs will find their gap as we move from just market. Well, I don't say manipulation. Market. Just basically speculative trading to actual, real, true value of the exchanges providing liquidity for the higher layer applications.
Well, I don't want to be too cute, but actually, I think one point that's worth making is, part of what people describe as being really attractive about DEXs is the fact that, pretty much they'll list any asset that people choose to trade. So there's much lower standards. Anybody in the world can trade them. There's limited to no KYC or AML. They trade 24/7. If you think about those features in the abstract, they kind of sound a lot like what are actually the most popular unregulated centralized exchanges, right? So there's a sense in which, if you sort of squint and just don't take in too many of the details, what makes DEXs really attractive is also what makes a lot of the centralized exchanges that are winning very attractive. It's just that DEXs are too slow, they don't have enough liquidity, and there's some fundamental technological limitations to really making them work the way we want. But you can very much imagine in the future where more and more of the global exchange volume is tightly regulated, which might just be because of the fact that right now we're still very much in this global Wild West phase of crypto, that drives more volume to DEXs, but also as the technology improves, people figure out how to get the experience of a Binance, but in an actually totally decentralized way. So I think people do want the things that DEXs offer them, but right now they're getting served by these sort of casino-like unregulated exchanges.
But the argument I've heard against DEXs is now you introduce a lot of a massive attack area because of price oracles and smart contracts and all that. So how is it any better than a centralized exchange that can be hacked? Can a DEX also be hacked technically?
DEXs can absolutely also be hacked. So I think the The advantage of DEXs is that, one, because of the fact that anybody can read and audit the code, it makes it much easier for individuals, because you have thousands, tens of thousands of people trading on a DEX if it becomes popular. All of those people have the ability to actually audit the code. Now, it's not to say that they all will. Of course, like a tiny minority of them will. But enough people will actually look at that code, as opposed to, for Binance or BitMEX, the only people looking at those code are their auditors and the engineers. And so, you've worked at a tech company. You know that, like, there are bugs in production code all the time. And only when they get exploited are they actually fixed. These decentralized exchanges also ideally have simple enough architectures that it's relatively easy to look at, okay, where's the code that holds all the money, and can we verify that? So for example, if they're using 0x, 0x has been verified by so many people that it's much less likely 0x has a vulnerability than that Binance or BitMEX has a vulnerability.
I'll jump into. I think we have the tendency to look at something new has to be better than everything else. It has to apply to all the use cases. But decentralization is a long road. It's a long arc, and we don't use Bitcoin in the same way in every geography or every use case, right? People wanted to have, buy your Starbucks with Bitcoin. I never thought that was a good use of Bitcoin, but it's a great use for remittance corridor, for example, right? And now crypto's coming into Telegram and coming into Facebook, and so it's interesting how that journey goes. And I think with DEX, one example could be systemic settlement, of applications that are machine-based, that are machine-to-machine transaction settling. So they're not traders acting on emotion or sentiment, but they're like, I just need to move this crypto into this crypto. A DEX is a great use for that potentially, and it doesn't need to have the great UI that we're lacking that we saw somewhere else.
Yeah, I think, at least personally, I think DEXs need to win on some dimension 10x better, which it doesn't need to necessarily compete against centralized exchanges. Maybe it's machine to machine, or it's some sort of new dimension. But again, just when you look at the space that's had a long time to develop, very little trading volume happens on DEXs. And I actually pulled the real numbers. So if it depends how you count real worldwide volume, but if you take out all of Asia volume, which people sort of have their own bias against, but if you take out all Asian volume, DEXs make up 0.02% of all trading volume. And actually, surprisingly enough, Binance DEX is 40% of all of that. So it's interesting that Binance's version of their own DEX, which some people could argue whether that's even a DEX or not, or how decentralized are they, sort of make up that in totality. And it's interesting because I've actually been I was early pre-sale investor in Binance itself. So one of the things that's just most impressive about the Binance team is just their raw shipping and execution ability. And again, I just compare this to more of the technical solutions, and even of the small volume today, Binance DEX is sort of the lion's share of the DEXs out there.
I'd say, one thing you mentioned, timeline, DEX has really only been around for 3 years. That's nothing in the lifespan of a technology. If you look at, digital currencies prior to Bitcoin, people were working on those for 20 years. And, every single one was a failure until Bitcoin came out. I don't think DEXs are going to take 20 years, obviously, but I think it is, just because it's been 3 years and we haven't seen anything, isn't a super meaningful stat in my view.
Interesting. I kind of want to move to the business model question. So what have you seen be the business models for both centralized and decentralized exchanges?
Centralized exchanges is fairly straightforward. I guess on one hand, you have a percentage of transaction fees. So most exchanges usually take a percentage of taker and maker fees. There's also listing fees and IOs and sort of all that stuff, but kind of roll that all up into transaction fees. And then the more, I guess, innovative or the less regulated ones will do the exchange token. So taking a portion of what those fees would have been and just buying back their own token from it. On the DEX side, I guess I'll let you guys comment on the DEX angle.
It's pretty similar on the DEX side. You kind of have a couple models. One is similar to centralized exchanges. The other is people have various tokens, but those token models aren't super fleshed out. 0x has had a token for a couple of years now, and they're just starting to flesh out the model and have a actual token model with 0x version 3 that's supposed to come out in a few months. Other ones are Kyber has a token associated with it, but I'm actually not sure what that's used for.
Cool, thank you. And so when you're thinking about investing in exchanges, what's your due diligence process like? What are you looking for?
Yeah, I guess ours is fairly straightforward. So we actually made an announcement of investment we made in an exchange called FTX. So it's a derivatives exchange based in Hong Kong, started by the Alameda Group. So Alameda Group, if you don't know, is one of the biggest quant funds in the space. So Sam, who is the founder of that, launched this new exchange called FTX and kind of built it more internally for himself. So a lot of our due diligence actually centered around talking to real traders. So we're friends with a lot of the sort of, I call it like crypto native funds in this space, the QCPs, the Alamedas, the Amber AIs sort of the world, and then also the more traditional players looking into the space. So the Jumps, the Tower researches of the world. And we basically just due diligence with the actual sort of real liquidity backstop providers on would this new exchange actually attract them to actually want to trade on their platform, and what are the dimensions that they're sort of most interested in that. So a lot of our due diligence really revolves around the demand side and the customer side of the exchange.
Actually, I want to add a question to this because I've had a hard time falling in love with exchanges and investing them. Part of it is my background in the financial tech industry from early 2000s, and part of it is just seeing that the life cycle of these exchanges. If you're a principal owner, you can make a lot of money very quickly, but you have massive regulatory risk. And I'm not sure what the arc for consolidation is. So actually, to Joey and the panel, I'd be curious, as you look at an investment in exchanges, are you thinking about an eventual consolidation of various players in the market, and is that part of your investment thesis as well?
Yeah, so that's a good question. At Pantera, actually, roughly, we just ran the numbers like a couple days ago. 35% of our portfolio is exchanges by capital invested. And so, the way we think about it is there's, one category of exchange, which is these institutional grade exchanges. So think ErisX backed. Those are ones where, we're gunning for like an IPO with those sorts of companies. I think the other category is ones that are exchanges in foreign geographies. So this is a company that's, trying to create the Coinbase of Mexico or Brazil, someplace where they know the market super well, and they're going to be able to operate there better than a player based out of the States. And those are the two models. For that second model, we anticipate kind of roll-ups and acquisitions. We've seen that a little bit, like Corbett got acquired. And the model usually is in kind of those more developing country markets, there's usually, massive conglomerates that end up just being across a ton of different sectors. This happens a lot in Southeast Asia in particular. And so those are kind of so far those have actually acquired. Corbett, another one acquired, Bitstamp. So that's kind of the current path that I've seen them take. You might envision someday, like, a Coinbase or an ICE might buy one of these companies too.
So I mean, at the risk of stating the obvious, the majority of volume in crypto around the world is in Asia. And a lot of the top exchanges, which are these places based out of Singapore or Malta or whatever, they are basically run like casinos, in the sense that like the founders control almost everything, and there's very little in the way of corporate governance or in the way of shareholders exerting power over the founders. So they are very unlike a lot of the companies that we tend to invest in here in Silicon Valley. The other thing to keep in mind when you're diligencing these exchanges is that, as you guys are probably all well aware at this point, the vast majority of stated exchange volume is complete bullshit. And it's not straightforward, but not trivial to actually verify how much of the volume on these different exchanges is real. And really the only people who are actually equipped to do that, like Chris said, is to talk to actual market makers and talk to people who are actually trading on those exchanges, and do they actually get their orders filled? And if so, with what regularity? That is really the only serious way to actually verify how much of the exchange on these volumes is actually, how much of the volume on these exchanges is actually legitimate.
Yeah, a slight addition to that, like one of the things that attracted me to this space so much is sort of Bitcoin and crypto by nature is 24/7 international worldwide. The center of gravity is actually not necessarily here, just in Silicon Valley. I think for a lot of the Web 2 and other internet innovations, we sort of had the luxury of everything being sort of within 20, 30 miles of here. But when you actually look at the crypto side, a lot of the reason why a lot of the volume is in Asia is because a lot of the traders actually are in Asia. A lot of the biggest trading funds are in Asia as well. And not just Asia, like emerging countries, Southeast Asia, Latin America. There's a lot of places where it's not, I guess, necessarily obvious, and sometimes we come with our sort of more Silicon Valley sort of bias to it, but it's also good to get a gut check of like where demand is actually coming from.
Interesting. And from a regulatory perspective, obviously the governments are going to try their hardest to fight decentralized exchanges. So how do you think about that challenge over the coming years for these DEXs to exist? Are they even going to let them exist?
I think there's an education challenge and just perseverance. In 2014, when we raised the Series A round for BitGo's $12 million round, the first 2 checks I wrote were to Coin Center with Jerry Brito and Chamber of Digital Commerce with Perry Boring. And I went to DC and I started talking to Congress and the Secret Service and other people about Bitcoin because Mt. Gox had just collapsed. And so everyone said, aha, we finally have a reason to shut this shit down. And they didn't know how to do it, but education was important. And what Jerry and his team and others have done is put out really thoughtful research and literature that tells a longer narrative and a bigger story than it's just drugs and money laundering and things like that. And so I think with DEX, with offshore exchanges, we have to continue to educate the regulators here and then have a different conversation outside the US about how everything we're doing fits within the existing regulatory framework. Don't invent new regulation for us. We're good. Like we can do this. And if we need to modify it, we'll help you understand that. So it's a challenging journey, but I think the companies that have the larger balance sheets and have more to lose have a responsibility to the industry to try to do that.
Yeah, I have no direct comment for decentralized exchanges, although I'm assuming if you architected a decentralized way in its sort of fullest extent, it'd probably be pretty hard to stop sort of from any one potential party. In terms of centralized exchanges, again, for proof of capital, we tend to be sort of very cross-border, and we really mostly focus where the demand side is coming from. So we actually believe it's way easier to start all these things outside of the US. The US is just so hard from a regulatory perspective because you have a lot of interest that you have to work with. And some of the companies in the space like Bakkt and others, they've had to raise enormous amounts of capital in order to get that, versus in Asia and other countries, the barrier is much sort of easier to get started.
Going to that point about a protocol being truly decentralized, I think one of the criticisms is that there's no DEX today that's actually truly decentralized. Is that true?
I think I really hate this notion of really decentralized and not really decentralized. Like, the idea that decentralization is a binary is just completely ridiculous. Like, decentralization is very clearly a spectrum. And Bitcoin did not start completely decentralized. It started with like a dude and his few friends on a web forum, right? Like that's what, today we would laugh at that and say like, this is not a decentralized cryptocurrency. Like one dude owns like almost everything that was ever mined. That's not a decentralized cryptocurrency. All these things take time, and the amount of decentralization that you want is going to be parameterized by how much money you have locked up in it, how long it's been used, and what the actual regulatory risk is. So the reality is a lot of the reason why regulators are not going after DEXs is not just because DEXs are so censorship resistant and wonderful and hard to break. It's that like they don't care because the volumes on these DEXs are negligible. And for the most part, yes, there's probably some illegal securities being exchanged on these DEXs, but it's at such small volumes and like not concentrated in a particular country. It doesn't give anybody much incentive to go after it. And if they do become bigger, these are questions that DEXs will seriously have to grapple with. But for now, most of what they need to care about is just like, one, minimizing counterparty risk, which is the thing that people fundamentally care about with DEXs, and two, just growing, just getting users. So I think it is probably the right move for them to not worry that much about decentralization right now and just accept being non-custodial and instead just try to focus on growth until it actually matters whether or not they're quote unquote fully decentralized.
I think one thing on that, I take a little different view because I think if you're not kind of, so I binarize decentralization a little bit. I think the binary line is, are you an operator or not under like the regulatory regime you are based in? And so basically it's kind of from the regulator standpoint, in my view almost, like, are you decentralized enough to not have to like say register at the SEC as an example? And so I think that's really important to be at least that decentralized kind of from day one. Because I don't think it's this thing where you can run it for 6 months and then beg for forgiveness later. That's not how the SEC's operated in this space. And so that makes it challenging, though, because it's much easier to acquire users if you take the Binance DEX route, which is basically a centralized exchange with a few kind of tweaks to it. it's much easier to acquire users that way. But I think at the same time, it's kind of like they're outside the U.S., so they're playing a different game. But I think if you're in the U.S., like somebody like 0x, it changes the paradigm quite a bit.
So I totally agree if you're in the U.S. Yeah.
Well, one small data point on that, EtherDelta, the SEC actually did an enforcement action against them. And EtherDelta, I don't know about the spectrum of decentralization. I kind of hate that term too. But EtherDelta was pretty decentralized. I mean, not like kind of fully all the way. But one of the things that was interesting was actually in the enforcement letter, one of the things they referenced to show that, I forgot the guy's name, the guy was the operator of it, is they actually pulled his subreddit comments. And he was helping people on the EtherDelta subreddit with their support request. And that was one of the things in evidence they showed, hey, you're the one operating the exchange. Look, you're the one answering the support request, which I think was a little interesting that they can go that far.
Interesting. And like when you, just to clarify, Joey, when you say operator, can you elaborate for the audience what you mean by that?
Yeah, so under most regulatory regimes, there's kind of this concept of, are you an operator of something or not? So are you, performing an action that makes the thing function? And like the simplest test, it's not a legal one, but the simplest test, it's a practical one that kind of like at a high level, should work in theory is if you were to walk away and just like stop typing, stop programming, would the thing you built continue to run? Now, it may not like improve over time. It may not be great. May not be a good user experience, but would it continue to function? And that's kind of how I think about whether you're an operator or not. And so if you look at EtherDelta as an example, the founder is a guy named Zach Coburn is his name. He hosted a website, and he also stored all the orders that users transmitted, and basically operated a server that stored those orders and hosted the UI on a site that he controlled the DNS and domain for. So those are kind of like some elements where even before that action came out, I was like, this guy's probably an operator. And so I think that's kind of like the line that I distinguish.
And do you think the SEC can come after developers, or developers considered operators?
Depending on what you develop. So this is kind of the really important thing. Zach was a developer. He was just writing software, but he wasn't just writing software. He was like operating servers. He was hosting the software. So the big distinction is like, are you hosting the software or are you just writing it? So an example might be if you take Bitcoin, Satoshi published Bitcoin, and Satoshi actually did run it in the beginning. But you could envision that if, say, like Hal Finney and one other person started running it, Satoshi was no longer operating it. Versus, say, certain decentralized exchanges, the person who created it continues to host some software.
But in Satoshi's case, you don't know who he was. So even if you have his GitHub commits, you can't really identify him. Whereas like every crypto project doesn't have that same element. So can't the SEC still come after you if you coded that protocol?
Well, it depends on whether the U.S. continues to consider writing software under the First Amendment. There's a bunch of historical Supreme Court cases on this, where people have, anything from CFTC stuff all the way to people writing encryption software that was at one point, considered to be weapons or munitions. In pretty much all of those cases, the software developer won. A lot of those actually went up to the Supreme Court level. Now, that was like a pre-9/11 era, so whether the U.S. maintains that merely writing software or publishing software is free speech is a little bit of an open question, but I'd like to hope that continues to stay under First Amendment.
And interesting, there are actually a few exceptions for that. I believe writing gambling software is one of the exceptions where software is not considered purely speech. But in general, and I think the CFTC commissioner who commented on that in general, there's kind of a presumption that software developers are not liable for if they do not themselves operate the software. But like Joey said, it's a brave new world. So we'll see what people decide when they actually have no other way of getting at some of the folks who operate these exchanges.
Awesome. And so because exchanges, especially in the US, are so tightly regulated, they're very cautious of what coins they list. And so do you think that's going to affect the alt market in the coming boom cycle?
Oh, there's a coming boom cycle.
Yeah,
Good-
what
good
coming
news.
boom cycle? Do you know something we don't?
Somebody tweet that out, Preethi. I am Preethi. That is. Yeah, it's also another, every one of these questions seems to be broken down geographically, right? There's a lot of exchanges are looking for volume. That's the test. Can this coin bring volume to my exchange? Or previously, can I get a multi-million-dollar listing fee if I list this coin? I think that that game kind of ran its course for a while, so there's a little more of kind of stability in that, but that means a lot of alts are not going to get the light of day, which opens the door for DEX. Then there's no volume there. So I think it does beg the question of where, how coins, whether it's ICO, IEO, or just kind of launching a token into the wild, how do you think about your relationship with the exchanges and which geos that you go into? And I'm sure you guys have comments on that. I'd be curious to hear your points of view. But I think that is changing, that we're not going to see the plethora of coins listed everywhere with the volume coming in.
Yeah, even with the sort of Asian exchanges like the FTXs, the Binance, the Huobi, the OKs of the world, actually the majority of revenue and I would assume profit, majority comes from Bitcoin, USDT, whether or not you like that or not, and maybe a handful of others. A lot of the long tail sort of alt stuff, like although they kind of have like their spikes up and down, like they don't really drive the majority of the revenue for the exchanges. So like unless something drastic was to happen on the user adoption side, I would imagine that to persist.
Actually, that's a good point. I think we're going to see some new factors coming into play. So, for example, when a large network like Kakao is launching Clayton and can potentially bring distribution to tokens at launch, the exchanges are going to be more interested in those tokens. And also, I mentioned Telegram before. I think that's going to be a game changer. 300 million users having access to this token and where that plays out. So I think as we see larger networks of users come in and facilitate token usage, then the selection criteria by exchanges will update.
Another thing to be mindful of just in like overall exchange market dynamics is that, in sort of in the normal finance world, spot markets where you like directly buy or sell the currency are a small portion of overall trading. The majority of trading is in derivatives. And we're now seeing the same thing happen to crypto. So right now, if you look at CoinMarketCap, it looks like spot trading is most of what's happening. But most of the exchanges counted on CoinMarketCap are complete bullshit. And like if you look at numbers that are adjusted for fake volume, the vast majority of volume in crypto is derivatives. It's not spot exchanges. So that is harder to do for like a lot of these long tail altcoins. And so again, like the vast majority of the volume is in Bitcoin, USDT, and I think it's largely the case that some of the most interesting stuff going on right now in the quote-unquote DEX space is really in offering derivatives through DeFi. So platforms like DYDX and other ones like it are, I think, tapping into a sort of larger trend that's going on in the space that makes them sort of facing a bit of a tailwind in figuring out where trading volume is going to be going in the future.
Yeah, some quick numbers to that. It depends how much of the real sort of total volume you count or not. But the futures markets is anywhere between 1-to-1 parity to the spot market price to like 4-to-1 or 5-to-1 if you discount a lot of the spot market volume. So we actually already see today that the majority of trading volume, again, depending on how you cut it, comes from the derivatives markets. And a lot of the derivatives and futures, like while they're sort of larger in comparison, there's actually a smaller number of them. So most of the derivatives volumes happens through BitMEX, OK, Huobi, and FTX, and sort of a handful of others.
Super cool, thank you. On a similar topic, we talked about what exchanges will list, but there's also a lot of delistings happening. Do you think that's going to continue to be a trend? And if so, how does that impact the exchange's like reputation and image in the public market?
So there will definitely be a lot more delistings going forward. So we're already aware of a lot of these sort of zombie chains that still exist for some reason, but like kind of nobody is using. And I think after the Ethereum Classic 51% attack that we saw last year, there are going to be more and more of these kinds of copycat attacks, especially against proof of work chains that don't have a lot of security. And those are basically direct attacks against exchanges. And so exchanges eventually will want to start delisting some of these assets as they become more insecure. It sort of gets accepted. They're like, okay, nothing's ever going to happen on this chain. Why are we still listing it? I think for decentralized exchanges, it's kind of a challenge to delist an asset but still claim you're decentralized. And so you need like some kind of governance or something really figured out to decide on delistings. And there are a lot of incentive problems with making sure that those work out correctly. So I think listings and delistings are kind of a challenge, but for most of the centralized exchanges, because the vast majority of their volume is concentrated in a relatively small number of tokens, I think over time we're going to see the number of assets listed go down for most of these exchanges as we get farther and farther away from the ICO boom.
Yeah, even more just like I guess to add on to Haseeb's comment, like even a more practical reality, if you're an exchange operator, I guess more from a centralized exchange standpoint, and you have some random altcoin that has 0.01% of market volume and 0.01% of revenue comes from it, but has 20% of your risk, you're not going to keep it on the platform for very long. So I think even just for like very simple empirical reasons, like a lot of things will probably not exist listed forever. DEXs are a whole different story.
Okay, so we have 5 minutes, so I just want to go with the last round of questions, and the same question for everyone. Do you believe the future is all DEXs, all centralized exchanges, or a mix of both? And second question is, like, what's your favorite centralized exchange and decentralized exchange today?
Will, I think you're starting.
Okay, so a mix, and I think the mix should be broken down to institutional trading and retail trading, and then within those, DEX and centralized. And it's just a reality of that certain traders or certain folks who want to have it, the purpose of exchange, have a need to do it in a certain way. They have to operate in a certain way, and that's going to be filled. And the DEX, I think, will fill a very important need. I look at the DEX actually. If I were running in a centralized exchange, I would rebuild my core as a DEX and put the institutional retail centralized layers on top of it, and then eventually I would roll out the DEX as an availability to kind of everyone, thinking about the future of smart contracts, KYC versus smart contracts, things like that. Ultimately, that's the long game, but in the near term, I think DEXs will just start to play these niche roles till the technology is proven and then come in. And my favorites, that's not your business. No. They'll come.
Yeah, I guess I said this a few times, but to recap, like I think centralized exchanges will dominate spot and derivatives market. However, I think the more hopeful answer is I think the decentralized versions of these, I think will take different use cases that are not necessarily spot and derivative. Could be programmatic, could be machine to machine, could be if gaming or dApps or something really takes off. There's sort of all different combinations and sort of very unique to this market. It's not only for trading, there's sort of all other things. In terms of favorites, again, I'm super biased, but on the spot markets, Binance, on the futures and derivatives, FTX, DEXs I don't use as much.
Yeah, I would say I agree with that. Definitely mixed use. I don't think DEXs are going to compete on spot, but they will compete on new assets and things you can't trade anywhere else. I don't really mean altcoins, but I mean other things, like certain types of derivatives, certain types of bets, those kinds of things. Favorite exchanges, I guess I would say centralized backed, decentralized, 0x.
Other things like Augur. Yay.
So I think I'm going to take the very adventurous answer and also say the same thing all these guys said. So I think it'll be mixed. I think that as the technology advances, DEXs will primarily really gain their foothold in things that can't be traded on centralized exchanges, like Joey said. But more specifically, I think that as some of these Wild West exchanges eventually start getting sniped by governments, more of the volume that they're serving today will end up having to migrate by necessity to DEXs. And then there's also stuff like synthetics and other things like that that normally you can't trade on a centralized exchange that will start becoming available in a decentralized, censorship-resistant way. So as for favorite exchanges, I think CZ is a gangster. So I'd say Binance for centralized. And for decentralized, I think it's not actually out yet, but I think StarkDex is going to be one of the coolest DEXs that we're going to see for a while, which is settled entirely through Starks, which are like a form of zero-knowledge proof.
Awesome. Thanks so much. For anyone in the audience who wants to reach you, where can they reach you all? I guess there's right behind me. Okay,
Oh,
never mind. Cool. Well, awesome. Thanks for having you guys here. You guys are way smarter than me about DEXs, so I learned a lot. I hope you guys learned a lot. And I guess you can just talk to them after this.
Thank you, guys.
Thank you.
Okay, so that was really awesome. I'm really glad to have these guys, rock stars, up on stage here. And the Silicon Valley Bitcoin Meetup is very thankful that they came around.
Thank you, George. This is awesome.
Will and I have been friends for a long time. I love this guy.